What's up, everyone? It's Scotty with MoneyVest, and Morgan Stanley just released a 40-page report going over Tesla and upgrading Tesla by over 60%, putting together a price target of close to $400 per share. I'm going to break down everything in that report, and they've also got a bear case and a bull case target on a Tesla, and of course, Tesla on this very news is pushing higher, a little bit over 5%. It is up over $262 per share. That's really where it's trading right now, pre-market. So as always, if you enjoyed this video and of course find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel, and link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included with our intrinsic value spreadsheets, our members only private videos. I recently did a video over the weekend going over 20 stocks, 20 highest quality growth companies that I am planning to buy with my fair values and buy targets as well. So links are going to be down below if you're interested in joining. So this right here was the report unlocking Tesla's AI mojo, enter the Dojo. So Dojo supercomputer is primarily why they are now very optimistic and more bullish on Tesla. They've upgraded the stock to an overweight rating with a price target of $400 per share, which obviously does represent significant upside from where we are at the moment, trading at just over $260. So they basically mentioned that investors have long debated whether Tesla is an auto company or a tech company. We believe it's both, but see the biggest value driver from here being software and services revenue. The catalyst is going to be Dojo, Tesla's custom supercomputing effort in the works for the past 5 years, and version 12 of Tesla's full self-driving system and Tesla's next AI day, early 2024, are worth watching. And we believe that Dojo can add up to $500 billion in Tesla's enterprise value, expressed through a faster adoption rate in mobility and network services, so SaaS model. And the change basically drives our price target increase to $400 from $250 previously, and we upgrade to overweight and make Tesla our top pick. I mean, you cannot ask for a more bullish report on a stock, right? Upgraded to overweight, top pick for a bank, raising price target by 60%. So of course, that's a pretty significant deal when it comes to the company, right? So 250 raised to 400, and of course a rating increase to overweight as well. So this right here is basically the flywheel or something that they are expecting now Tesla to be getting into, and some of the highlights into their own thesis that Tesla's capabilities and business model can significantly benefit from the development of custom AI tools. It's too big and too specialized opportunity not to have in-house. So they've got a massive amount of data capture, and that's true. Tesla's collected billions of worth of miles data driven from their Tesla vehicles. They've got the world's top talent. They've got the world's hardest compute and software problem, autonomy, which they are trying to fix, of course, with camera-based sensors, and of course be able to have fully autonomous vehicles. And this right here, I was kind of curious about this. Where did they get this from? Unlimited access to capital. Like, no company on earth has unlimited access to capital, Morgan Stanley. Like, at some point, if their ROI is not that great, if the return on invested capital is not great, if the revenue is not growing at the same rate as how much Tesla's investing in the business, I mean, at one point, they're going to start burning cash very, very quickly. But of course, Tesla's been very efficient in that way. But this is not something that I would put unlimited access to capital. Like, who has unlimited access to capital? But we've got vertical integration, hardware and software. And those are, again, some of the capabilities that Tesla has in order to kind of further their initiatives when it comes to electrification, autonomous vehicles, and supercomputing as well. This right here, we believe Dojo can accelerate Tesla's auto and SaaS double flywheel. So on one hand, you've got the SaaS flywheel with user experience, platform stickiness. We've got affordability, monthly user base, software service revenues, data insights. And then on the other hand, of course, you've got the auto flywheel, which is going to be the capacity, cost, electrification, price, all those things. So this is really what Tesla, for the most part, is right now. 95 to 98% of the revenues basically come from auto sales, electric vehicles. But as I mentioned before in one of my previous videos, Tesla is kind of going through the similar process that Apple went through for the first 10 years, right? Kind of building that install base. And now you can see that Apple's revenue is shifting away from iPhone over to more services, right? iPhone still makes a majority of the revenue for the company right now, over 50%, but services is slowly and steadily creeping up, and it's gone from like 15%, 17%, 19% to now over 20% of the revenues coming from services, and it's a really, really high margin business, right? So that's really what Apple's been able to do, and I think Tesla is on Apple's footprint on basically kind of creating that install base, selling all these electric vehicles, and eventually that SaaS model is where majority of that money and profitability is going to come from, because again, SaaS is extremely high margin business. They basically mentioned we collaborated with a range of AI experts at Morgan Stanley to weigh in on Tesla's AI ambitions and to compare and contrast them to those of NVIDIA and other hyperscalers, and extended beyond the implications for Tesla. We hope this work sheds light on the potential of broader custom silicon market. And before Dojo, of course, industry target was very much limited and constrained to automotive. After Dojo, they're foreseeing that Tesla is going to open the doors for multiple industries. It's going to be labeled as a tech company after the supercomputer is complete. AI training speed, right now, it's going to take months. After Dojo, it's going to be weeks or if not days. CapEx, right now, it's going to be in the high single digit in billions of dollars, because they are going to be spending a lot to build this thing out. And eventually, after Dojo, it's going to be a lot less. And even for companies that they are going to be selling this to, right? Low single digits, because they're going to be able to train these AI models using Dojo, the supercomputer, fairly quickly and fairly efficiently. That's why energy usage also right now inefficient. After Dojo, it's going to be efficient. And data processing, it's going to go from cost to generating revenue and generating savings for companies as well. So in conjunction with this report, we feel it's prudent to include a degree of optionality for Tesla's AI potential into our revised price target, which has increased to $400, but their bull case valuation raised to $550, and that's up from $450, and our bear case valuation raised to $120. Now, see, here's the problem, right? That is such a significant degree of variability in terms of the price targets. Like 120 being the bear case and bull case being 550, that's a gap of, I would say, over 300 to 400%. See, that's why it's difficult to really take them seriously, because on $120, all the way up to 550, there is a variance of about 360%. You know, so, and right now Tesla's right in the middle of 260 right now. So obviously it's 100% over 120 and significantly lower than 550, but that's the problem here. Within our forecast and valuation, we express the potential of Dojo through our raised assumptions, primarily for Tesla mobility and autonomous robotaxis and Tesla network services, SaaS business derived from Tesla vehicles and third-party customers in the form of faster adoption and higher ARPUs, so average revenue per user. And we share a comprehensive review of Tesla's valuation on our new earnings forecast, which have increased approximately 20% by fiscal year 25-26, which we believe fairly underpins the $400 price target and the growth and valuation multiples of the relevant tech peer group. So they are expecting significant growth with respect to network services, the SaaS model, which will eventually come online, and higher margins for the company. But again, they've got a big variability with these assumptions, because the bottom line is Tesla's trying to do something that nobody's ever done, right? Build a supercomputer in-house, not to mention solve autonomy. And a lot of these things kind of hinges on Tesla's ability. A lot of the Tesla's valuation and the price target hinges on Tesla's ability to accomplish this. If they can't, it's going to be an electric vehicle company. They're going to be selling EVs. They're going to be fine, right? But if they can, of course, there's significant upside with what they can and will achieve in the future if this actually does come into fruition. So there's, again, that degree of risk in terms of that qualitative aspect. Can Tesla actually do this, right? Can Tesla achieve full autonomy? Can Tesla build a supercomputer that's going to make their own processes more efficient, more energy efficient, and of course, more resourceful? They can train generative AI models fairly quickly, and of course, sell it to third-party services as well, right? Third-party customers. So a lot of that is dependent on the if, right? If that's actually going to take place. And the most important aspect of investing is to not really have your, so it's kind of like confirmation bias or anchoring bias, right? Not really building your thesis based on one or two things or one or two data sets on a specific company. It has to be more holistic, right? And the same thing was true with Meta, right? Meta Platforms, you go back in October, my thesis was not on augmented reality, virtual reality, and the metaverse, right? I was never buying Meta because of the metaverse. Metaverse was kind of like the cherry on top. If it works out, great. If it doesn't, the company's still undervalued, right? Meta was still undervalued back in October, trading at under 10 times price earnings multiple. Free cash flow was strong, earnings were strong. So the metaverse works out, it's great. If it doesn't, no big deal. The company's still worth investing in. And I think that's how I want you guys to look at Tesla as well. If autonomy works out, if the Dojo works out, supercomputer works out, great. That's phenomenal. That's the cherry on top. And it's going to take Tesla to a couple $1 trillion valuation. That's fantastic. But even if it doesn't, I believe Tesla is still worth investing in my opinion, for the long term. And I'm still investing. It's my biggest position. But of course, we have to consider the valuation, right? There's going to be that degree of risk with whether it does work out or doesn't work out. What's that change in the valuation? So if it doesn't work out, in my opinion, 120s, 150s is my fair value, intrinsic value. And that's where I'm willing to sort of buy Tesla, dollar cost average, and of course, buy more shares. And if it does work out, of course, the fair value is going to be bumped up to a little bit higher level. But I'm not going to do that because that's still uncertain, right? That's still, we don't know if that's going to actually take place. So that's kind of like my thoughts on this report. And this right here is finally what they are suggesting. So earlier it was $250 price target. The increase has primarily come from mobility and battery business. So basic network services, and Dojo's impact on Tesla's mobility and network services drives 86% of the price target change. So majority of that price target change is coming on the back of Dojo, which is a supercomputing segment of Tesla's potential initiatives here, investments, and the new price target is going to be $400 per share for the company as well. So let me know your thoughts down in the comment section below. Tesla here very much pushing higher, 5.5% right now, $262. And again, this is the entire technical breakdown. So right now we're starting to break out above that $260 level, and that next resistance and target is going to be 277. So this right here is going to be that level to watch. I would take, again, anything any investment bank or any analyst or anybody says with a grain of salt. Do your research, figure out, okay, what does that mean for you and of course for your position, and make a decision from that. So I hope you guys enjoyed this video, find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.